Hi and welcome, chart artists. Today I want to share with you one of the simplest Bitcoin investment strategies that I have come across so far. There's many ways to skin this cat, but I would like to share with you this investment strategy. I often get asked the question, if I do not know how to trade, can I still make money from an investment perspective? And the answer from most people is buy Bitcoin and just hold it for the next 20 years. Okay, but I want to share with you a strategy that even a 10-year-old person can perform from an investment perspective. Trading, a little bit more complex, where you're entering, you've got Fibonacci and trading strategies that you apply, and you apply good risk management. But from an investment perspective, if you bought a bag of Ethereum or Bitcoin, because this strategy can be applied to your favorite altcoin, I would personally, for me, I prefer to stick to Bitcoin or Ethereum, the two more stable coins out there. But this strategy is extremely powerful and we will go through that. But first up, please smash up the like, subscribe to the channel for future notifications. Let's dive into this amazing investment strategy that I would like to share with you. And perhaps before we dive in, please, if you are not registered on exchange, you would like to trade with me, please support my channel by using my affiliate links. It costs you nothing and it shows love towards the channel and keeps me here to bring you this analysis on the daily basis. Right. Let's get serious and into business. I am not sure if you guys have heard about the Renko candles over here. Okay, so let's dive into it. Quite exciting to share this with you. The question is always, if I'm an investor and a long-term hodler for Bitcoin and Ethereum, where do I know where to sell? And where can I take profits or potentially short the market to the downside if we go into the next bear cycle? And what I've done here is I'm here on the weekly time frame, and you can play around with different time frames and they do give you slightly different results. The reason I prefer the weekly time frame is because the false signals are reduced and it gives you a bigger P&L, a bigger profit margin than using, for example, a 2-week time frame, which I've also tested. We can go through it, which gives you a little bit less gains, also fewer trades, but even less false signals. Okay, so the first thing you want to do is, if you do not have a subscription to TradingView, because these chart patterns or candles can only be found on TradingView, and I think you need to have not the essential package, you need to have the essential plus package in order to view these candles. And basically how it works is you can either have your normal candles like everyone is used to, or you can go and you change your settings here to Renko candles. Okay, once you have your Renko candles set up, when you go onto the weekly time frame, the rules that I've applied here, you can adjust. Okay, I've come up with a basic set of rules to create consistency that you have to follow regardless of how your emotions get involved. You have to become robotic about it, is to say you follow these set of rules and I do not ever break them, and will I turn profitable or will I start losing cash? Okay, so I've back tested this strategy from here, the 17th of June 2019, up until where we are right now, to say that, well, do you suffer a loss or do you actually grow your investment, or is it better just to buy and leave it and have diamond hands and not play the market at all? Just leave it in your spot wallet, put it in cold storage and forget about it, and then maybe in 10 years you'll have a boatload of cash. Okay, I did, however, do a small little comparison where it just proves to me that this strategy is the best strategy to know where to cash out, when to short the market, and when to long the market from an investment perspective. So, you know, everyone wants to invest and make that bag of cash for retirement one day, perhaps paying off the mortgage or student loans, whatever the case might be. This strategy for me is perhaps the best strategy that I have found so far to make you more gains than just by having diamond hands. Okay, so let's dive into it. First thing I did here is you can see I have little arrows that says buy, sell, buy, sell, buy, sell, buy. Okay, cool. So in the last 4 years, you would have made 13 trades. Okay, that's not a lot. 13 trades in 4 years or 3.5 years, that's not a lot. So let me grab my little summary of how I worked everything out. And let's go through it. Cool. During the last 4 years, a total of 13 trades were taken. And here are the rules that I've set to say that I will only buy the second green candle after the green candle, and I will only sell the second red candle after the first red candle. Okay, so you have a green candle, you only buy the second green candle. Okay, so after you get a confirmation green candle, that's where you enter for your second green candle. I hope that makes sense. Then when you sell your long position, so you took the long over there, and you just hold it until it turns red. You hold it, you hold it, you hold it, and then finally it turns red, and that's where you sell. So now you can put in a short order on your portfolio to say that, well, perhaps we are now going to find momentum to the downside. Okay, so there are losses and wins along the way because no trading strategy is perfect, but it does seem to me that this trading strategy is profitable enough to be able to apply this to your investment portfolio. So the rule here is, what I've done is, you buy the second candle, you sell the second candle. So trade 1 is 467% that you would have made on your portfolio if you just follow the simple rules. So here you had a little fake out. So you now shorted the market. You went into profit and then you went back and you made a green candle. So you sell. Okay, I'm out of the trade. I shorted. It's not working in my favor. So you wait for the green candle to close and then you enter along. So during this phase, you had a couple of breakouts and fake outs where you can see that initial profit was amazing, 467%. Then you lost 5.8%. Then you broke trade 3, you broke even. Trade 4, you lost 5.5%. Then again, you lost 10.5%, but then it starts moving in your favor. You know, you follow the rules. You do not break your rules. You enter a short and you have this nice momentum to the downside, which gave you 23.5%, basically making up all your losses, almost all your losses, but still you made some significant profit over here. Okay, trade 6, then trade 7. So this was trade 1, 2, 3, 4, 5, 6. Now you're going to trade 7. So you ride the momentum down. As soon as you form a green candle, you cash out. Now you enter a long position. You ride it on the way up and you make, where's that? Trade 6, 23%. Trade 7, 15%. Okay, so that was a 15% move. And then you get your first green candle of your red candle, you cash out. It doesn't form a second candle for you to buy into the downside. So you wait until you get a green candle, you then buy in again. And you know, and this trading strategy obviously can be refined, and it can, you know, you can apply different rules to it to make it even more profitable. Perhaps watching the candle, you can see here towards the end, a green candle is busy forming, and perhaps you want to cash out when it starts entering the territory of this candle. So definitely room for improvement in terms of bettering the strategy. But I think the one thing I want to prove here or share with you here is, when you have a consistent plan with rules that you do not break, you can make profit. It's when emotion gets involved and you change your rules and you listen to market sentiment and you go onto X and you see people are being bearish or people are being bullish and they change your mind, where you make mistakes. You have to be robotic about the process. Is to say, the rules here are, I buy the second confirmation, whether it's green or down, green or red, and then you just wait. You wait, you wait, you sell. Okay. This was the tricky area, and here you would have entered 1, 2, 3, 4, 5 trades before you turned profitable. Okay, but the profits are significant enough to make this trading strategy worth it. Again, second candle, you ride the wave up. There, premature, you cash out, but then you enter again, you ride the momentum up. Yeah, beautiful entry. You would have ridden the whole bear market down, and then here you would have cashed out, and then you form a new red candle and you back into the market from a short position. Now, at the moment, just this move up that we've had here, if you followed this strategy and you bought after the first green candle was formed, you would have made, during this move up, 75% to where we are right now by following this strategy. Also, if you followed this strategy from 2020, you would have made 604% profit. So definitely a very simple trading investment strategy that you can follow. You don't need, extensive trading knowledge and Fibonacci and volume trading strategy. Just by having a subscription to TradingView, and please, I do have a link down in my description if you would like to sign up and use this to trade from an investment perspective, and you go and you choose your Renko candles like I've highlighted, and you can potentially make more gains than just hodling. Okay. And also, you don't need any indicators, no trend lines, and you can build your own rule system around it. And you can go and play around to say that, well, I'm going to sell each first red candle, and I'm going to buy each first green candle, for example. So you can definitely play around with a strategy and go and back test it to see that how much is the profit. Go use different time frames, use the 2 weekly, use the daily, and you'll see they will give you different results. Obviously, the smaller the time frame, the more you're going to have to trade. So you have to also weigh up from an investment perspective. Do I want to weekly check into the charts or daily check into the charts to see what's happening? Or do I not have enough time? Perhaps I want to do it once a month. Perhaps you go and use the 2-week time frame or the monthly time frame. Definitely truly excited about this trading strategy or investment strategy. The other thing I wanted to highlight here is to say that, well, what if, let's drag this one into the picture and we say, okay, I use the 2-week time frame. 2-week time frame, as can be seen here. Okay, if you use the 2-week time frame, you would have had no minuses. You would have made smaller amount of profit, 416%, and you would have only traded 4 times during 4 years. Okay, so go and play around with the different time frames. Then I went, just for the fun of it, I said, what if you only want to spot trade? You do not want to put your money into a leverage account where you can short the market. Then you would have gained 544%. Where the strategy that you then apply is to say that I only long green candles and I get out of the market as soon as I see a red candle. Okay, a red candle, sorry. So you entered your long, you're out the market. You enter your long, you're out the market, and you stay out. And then you enter a long, out the market, you buy back in as soon as you get your second green candle. Okay, and then this entire way down, you would have been out of the market. There would have been your first false signal, a couple of false signals here as well. But then you're out of the market as soon as the red candle forms, and then you buy in and you back into the market to make some significant gains. So you have to weigh up. If I'm only spot trading and I can only go long, you're looking at potentially 444%. If you are playing the markets up and down, you're looking at 604%. Versus a lesser time frame trading where 2-week time frame gives you 416%. Okay, so definitely a powerful investment trading strategy. Please let me know in the description or in the comments down below what do you think about this trading strategy. It's just, there are various different ways in terms of how you can even trade your long-term portfolio to make sure that you are catching the top more or less of each bull cycle and you are shorting more or less to the bottom of the bull cycle. This to me is by far the simplest strategy. You can use weekly RSIs. I know some people do like to use weekly RSIs. When it gets to the top, they sell. When it gets to the bottom, they buy. There's just a lot more trading that happens there, and there's also a lot more false signals. Let me know what you think in the comments down below. I really enjoyed this trading strategy. Also, you can apply it to Ethereum and many other charts. And I think that's it from me for today. Let me know if you enjoyed it. Smash up the like and subscribe to the channel for any future notifications. Until the next one, cheers for now.